Hi, everyone. Before we get on with today's episode, which is a news roundup with a lot of very big news articles in it, I have a bit of a confession to make. Earlier this week, I was supposed to be researching property portals, but the confession is I got stuck on one particular portal, just basically clicking through and playing with loads of listings. That particular portal that I got stuck on was ImmoScout24 in Germany. Why did I get stuck on ImmoScout when I'm supposed to be looking at 900 portals? I got stuck on ImmoScout because I was playing around with the virtual staging feature that they've got on there, provided by our sponsor, PropTex. This is a confession for Simon more than anyone. I wasted about 15 minutes of my work time this week just clicking around through loads of different images and playing around with it. If you want to get people like me stuck on your real estate portal website, go to proptex.com. That's proptex with 2 X's.com. Or you can hit the guys up on LinkedIn and obviously say that we sent you. Now, on with the show. Hello and welcome to the PPW Pod, bringing you news, views and interviews from the world of real estate marketplaces and PropTech. My name is Edmund Keith. I'm the editor of onlinemarketplaces.com, joined for today's episode by Harvey Hancock. Hi, Harvey.
Good afternoon, Ed. Great to be back.
And Simon Baker. How are you doing, Simon?
I'm very well, and a good morning from me. It's 8 o'clock in the morning, and I was going to say sunny Florida. Pretty sunny here.
Cool. Today's episode is news. This is a roundup episode. We've got a lot of big news to discuss. We will get straight into it. The big news breaking today that I have just covered on the pages of onlinemarketplaces.com. CoStar has reportedly launched a bid to take over Australian number 2 portal Domain. Harvey, could you bring us a bit more about this? Give us some of the details.
Yeah, absolutely. So it all feels a little bit like smoke and mirrors at the moment. There's nothing official that we know, but what we do know is that CoStar has started buying Domain shares on market, all above board, all fair, for about $2.4 per share. Now, Simon was just explaining to us off camera that CoStar would have to buy 20% of Domain shares or to launch an official bid. And
we're going to get this right. Having been...
go on, Simon, you take over.
I think so. Given having been chairman of listed companies on more than one occasion, got a little bit of an idea here. All right, so a company can acquire up to 19.9% of another company on the stock exchange without having to make a formal takeover. So what companies can do is you buy 19.9%, okay, on market, which means from other shareholders, okay, and then you can creep, which means every 6 months you can buy another 3%. And you can do that for as long as you want without having to make a formal takeover offer. If you want to go faster, you then have to make a formal offer to the company. Yes, we're going to buy all your shares at a certain price. Or you don't have to, you can make an offer, an on-market offer to buy 50% of the shares. Okay? But it has to be an open, declared offer so that all shareholders can then decide what to do in a fully informed way. One thing at the core of all of this is that the market needs to be fully informed about what is happening. Okay? So that's why they're acquiring shares right on the market as we go. I'm just seeing here that what they've done here is they've secured. So this is what I've just picked up today, like from a couple of hours ago. They've submitted a non-binding offer to acquire Domain after building a substantial stake. Okay, and that they've acquired 7.5% from a single shareholder at $4.20 a share. Okay, which is a 35% premium over the previous price. Okay. And then they've now made an indicative non-binding offer to acquire the company for $4.20 a share, valuing Domain at $2.6 billion.
Okay. Right. So I think what's happened here, and like Simon, you've been in a position where this kind of thing has happened to companies, that you've been involved with. It looks like to me, CoStar have approached Nine Entertainment, who own, I think, 60% of Domain, and they've said, we would like to buy your 60%. And Nine have said no. and then they've gone, okay, well, we'll just buy whatever we can on the market, right? Now, it's obviously, it doesn't feel like this is going to go anywhere. It seems like we're going to be talking about this for a while. I actually emailed both parties before writing the story and very quickly got no comment emails back.
Well, they can't comment, right? Because
no, but the point is they emailed back very, very quickly. The domain PI person emailed back at something like quarter to midnight their time. So like, this isn't, they are prepped for this.
Well, it's not case they're prepped. I mean, you can see what happens is the following. If you have more than 5% of the company, you're what's called a material shareholder. So if I buy your shares, you have to declare to the market that you've sold your shares or you've bought the shares, because it's a material stake. They bought 7.5% from a single shareholder. So clearly everyone knows what's happening because it's done in a transparent way. Okay. Now I could buy 1% from one person and 1%, but as soon as I get above a threshold level, I have to then say to the market, hey, I exist. This is who's buying. This is what's happening. Well, not necessarily what's happening, just that I'm buying on the market. So I think the real issue here is I don't know, but my guess is that they've probably gone, have a chat to Nine, the 60% shareholder, said, I want to buy the business. If I can buy their stake, you take control. But if you buy their stake, you have to make an offer to buy the complete company. Nine has probably said, not enough, because this is their biggest asset that they own. So then they said, well, we think the company is fundamentally undervalued. And remember, this is they're buying an Australian company valued in Australian dollars using a very powerful US dollar. That's far more powerful than it's been in a long time versus the Australian dollar. So it's actually cheaper than it was probably 12 months ago, just because of the strength of the US dollar in this process. So what's likely to play out is that tomorrow the board of Nine will come back, right? So the board of Domain will come back, not Nine. Domain will come back and say, thanks very much, but we are either accepting or rejecting your takeover offer of $4.20. Okay? So they made a non-binding offer.
What's the premium in that, by the way?
That's 35%.
Right.
This is the highest they've been for year 18 months. Okay. Now, what the question that the board has to be really asking themselves is this enough? Is Domain trading at a low value because they've lost the CEO? They've got Greg Ellis stepping in as interim CEO. There's a whole range of things happening that at the market, and Domain has sort of really not performed well for the last 6 to 12 months. No, longer than that, because you keep an eye on them and you can see that they've underperformed. REA has ripped ahead in terms of share price out of this. I think what you'll see tomorrow is that REA's share price will drop naturally, because having, one thing is to have what is fundamentally a less than well organized number two in the market, and they've lost position in many of the segments. They used to be super dominant in the inner east of both Melbourne and Sydney, and they've just lost positions in markets. Okay, and they've got CoStar coming in with some views on how they're going to run this. I think it's interesting that only a couple of days ago, Greg Ellis, who's the former CEO of REA, was appointed as the interim CEO of Domain. Either that's coincidence or someone saw something coming, or maybe that doesn't help at all. I don't know in that process. But I do think there's going to be a lot of news coming out of this over the next 3 to 4 weeks. But it's not one of those things that's probably going to hang around for a long time, because I think if I was to roll the dice, I would think they've got this 7.5%. They can make a non-binding indicative offer to acquire the company. the board can reject that offer, but that still means it's a live offer on the stock market. So you could end up in theoretically Nine owning 60% and CoStar owning 40%. And that's the theoretically what you could end up with. And then the company becoming delisted. Funny story, if you go back to, I'm going to get my dates a little wrong here, about 2005, exactly the same thing happened with REA. It was News, who was a 42% shareholder of the company, launched a offer to acquire the remaining shares in the company, thus take it private. I don't remember the numbers. I think $1.50. Remember, it's now $200 odd, right? It's about $1.50 was they offered. They picked up about another just under 20%. That's why they've got about 60% of the company now. That's where they got it from, was that offer. And the rest remain listed. People said, no, we're not selling. Okay. And what happens is the following, is that if I make a takeover offer to buy Domain, I put an offer out to all shareholders. Okay. If I can get to 90% of the shares, I can then just compulsorily acquire the rest. You have no choice. Ed, you say I'm not selling, you go, bad luck. Yeah. I've got your shares. Once I hit that 90% threshold. So my hypothesis is that if they really want to buy the business, they've got to negotiate with Nine, because Nine's holding the cards. And if I'm Nine, I'm going, build your stake. I've still got 60% and control of the business. At some point, you're either going to be a minority shareholder to me as the majority shareholder, or we're going to have to agree on a price for you then to become the 100% shareholder. So if I'm Nine, I'm holding out, going, go for it. Okay. All the little guys who are sitting on shares at $2, whatever it is, at getting their 35% up, they're going to sell tomorrow because I've just made 35% profit in a day. Okay. So you theoretically, and the word theoretically here is, end up with a split, 60-40 in the shareholding. The company gets delisted. Then there's a negotiation that occurs.
Okay. There's obviously not much more we can say about this because, we
don't know
any more details. And I suspect that if and when it goes ahead, we'll talk about it a lot more. So we will be moving on. Just to say, though, that, News Corp and CoStar already compete in the US. If they were to start competing in Australia, I think, Harvey, you're going to be writing a lot more headlines about he said, she said, right?
But one thing that is very important is that we did discuss this with Andy Florence at the PPW conference in Barcelona 6 months ago.
Yeah, if I remember rightly, you brought up the prospect of CoStar owning a real estate portal in Australia, and he wryly smiled, shook his head, and moved the conversation on, something like that.
Correct. And if you are CoStar and you're looking around the world for good assets to buy, Domain is towards the top of that list because it truly has underperformed over the last, honestly, 5-10 years, if we're really to be honest. And it has amazing legacy. It was around before REA. If anyone wants to know, it was actually, Domain actually existed before realestate.com.au existed as a portal. Okay. And so I think there is a very strong case that if CoStar is executing to its plan, which is talked about openly about wanting to participate in these marketplaces outside of the US, then this is a very good, this is what I would have had on my list as an acquisition.
Okay, we will move on. There's a lot to get through today. Speaking of CoStar, the so-called portal wars, so-called by people like us, by the way, we have a new front line in the portal wars, rentals. So Zillow, CoStar, and Realtor.com all released Q4s over the last kind of couple of weeks. And one thing is becoming increasingly apparent, and that is that there are now really only two players in the US market on the rental side. Harvey, why don't you fill us in about what we're talking about here?
Yeah, so Zillow has agreed a $100 million agreement with Redfin to syndicate its rental listings, basically bring them all into one big space. And unfortunately, that's come at the cost of some Redfin jobs, 450 jobs. But it seems to me that Zillow is pretty adamant that the next billion-dollar opportunity, in its own words, is in the rental space. Ed, you have a bit more detail on the nature of the CoStar versus Zillow rentals market share, the split between multifamily and single residences. But in theory, it's now, as you say, 2 players instead of 3.
Yeah, so Zillow actually did a deal with Realtor.com, I think a couple of years ago now, to basically take all of Realtor's rental listings. They've now done a deal with Rent, so-called Rent. I never know how to pronounce this. Is when you write it down, it's Rent full stop. I never know if it's called Rent dot or just Rent, which is the rentals arm of Redfin, which was the kind of third player in all of this. Now, traditionally, as I understand it, Zillow has been very good or very strong with the kind of what they call single family rentals. So what they call mom and pop, like small landlords, whereas CoStar owned apartments.com has traditionally been very good in what they call multifamily. So the bigger apartment buildings. Now, what's interesting here, and Simon, I'm sure you know about this, in the US, sales listings are all governed by the MLS. Like all listings go on the MLS and anyone can have access to all the listings. That's not the case in rentals. So there is a bit of a scrap for listings going on at the moment. Is that about right?
Yeah, the rental market in the US is very, very similar to the for sale market in every other market in the world, right? You want listings, you have to go and work for them. Okay, go out, bang on doors, talk to agents, talk to these rental agents. I'm talking about the multi-home facilities, the large condos, etc. And you got to sign them up. Okay, and then you get them to pay advertising fees as you would in any other portal around the world. And it's only in the for sale segment that the MLS is the dominant player, which means that you don't have to work hard for the listings, but you've sort of have to work very, very hard to get the agent to spend advertising dollars with you. So clearly another CoStar has done a very good job over the years at targeting a segment of the market that is very valuable. Okay, and the rental segment is very valuable, and as if affordability becomes even harder in the US, then more people turn to rentals over time.
Yeah, so you mentioned there that it's a very lucrative business for CoStar. CoStar's rental business, apartments.com, grossed, I think, over $1 billion in revenue in 2024. And so Zillow's obviously looking at this and going, right, well, we can challenge here. CoStar said in their Q4 reporting that the kind of single family, the smaller rental listings on apartments.com increased by 59% year over year to something like, I think it's 323,000. So what seems to be happening now is they're going after the different parts of the market. So apartments.com, which used to be big in or still is big in multifamily, is now going after the smaller rentals, and Zillow is now going after the big multifamily listings by doing these deals. As for the financials themselves, the reporting, CoStar increased revenue by 11%. That is on a yearly and a quarterly basis for Q4. Zillow increased revenue by 15% for the year, but was still unprofitable. And Realtor increased revenue by 2%. That's only on a quarterly basis because it's Australian reporting. I'm interested to get your view here, Simon. We tend to frame all of these these companies reporting their quarterlies in the context of the market. Did Zillow outperform the market or whatever? But can we kind of start to see maybe reframing it a bit about performing their bottom line, performing in versus their bottom line here. So CoStar 11% revenue increase, obviously below Zillow's 15%, but it was profitable. Zillow, right, okay, great, you've got a 15% revenue increase, but you're still on a net profit basis, really unprofitable. And Realtor.com, everyone's saying, oh, great, they've finally had an uptick in revenue, but they're still not doing great. How do you, as someone who pays attention to the market and sometimes invests in companies. How do you look at those three sets of results?
Well, you got to break them down. CoStar is a multi-trick pony. They've got many things that they do. So overall, the company is growing. But you've got commercial, you've got data, you've got residential, you've got a whole bunch of stuff. You've got in the US, you've got outside the US. They are truly a business that seems to know what they're doing and heading in the right direction very, very fast. Right, so that to me makes a lot of sense. I've not had a chance to dive into those numbers, but my hypothesis is a lot of the growth probably came from commercial and its current businesses. So that shows that I think they know what they're doing. Zillow, of course, is US primarily for sale and mortgages and such. So it's around that segment of the market. So they're very focused on one thing and growth of that. So I think you put CoStar and Zillow in the same bucket, and Realtor, of course, is this REA-owned business that's coming out of that's got ownership in one country. It's got operations in the US. You've got a relationship with the National Association of Realtors. What's this showing is that that's a very tricky relationship to manage. I mean, the relationship for my looking at this is that the relationship between Realtor.com and the NAR was always tricky. I remember back in 2008, we looked at this deal. We looked at acquiring Realtor.com, and we had a nice plan, and it looked wonderful on a spreadsheet. But whenever I went and spoke to anyone about it, they all scratched their head and said, "Oh, that relationship, you can't really do what you want to do on the Realtor.com side because the NAR had some requirements, and it was this balancing act." And then I realized that from my learnings of being in Australia, but running a business, for example, in the United Kingdom, which was Property Finder then, is that managing things over a long distance is really hard. It's especially if the market structure is already complex. So here, NAR, Realtor.com, you've already got Zillow, you've got, in those days you had Craigslist, you had a whole Craigslist and so on, you had a whole dynamic in there. So the thought that I could sit in Australia and then somehow pull strings and make it super successful in another country, I quickly came to the conclusion that unless I found someone who was really smart and knew what they were doing, I would end up my head would explode. Okay, and I'd just be sleeping on a plane backwards and forwards. So I think that the question here is, why is it only 2% growth? If Zillow can get 15, can't you get 10? You got a great relationship with the NAR.
They've had any growth for about, I can't remember, something like 7 or 8 quarters, or even 10 quarters of,
Yeah. And I think this is pro-testament about two things. One is, is everything really focused in the right direction? And two, CoStar is clearly doing a fantastic job, at least pulling traffic away with Homes.com.
Yeah, two other things that were kind of interesting covering the financials from the US over the last couple of weeks. As always, Andy Florence remains the only CEO in the industry whose call with investors I will actually tune into, because he's actually interesting. So he admitted on a call with investors a couple of days ago that when CoStar was using staff from different departments to sell subscriptions to Homes.com, it didn't go great, basically. And he said that we need a dedicated team to sell Homes.com to agents because it's a completely new proposition in the US. They're not used to paying for what Homes.com is selling. And they're now trying to scale this dedicated team to 500 salespeople, right? My question is, have you ever had to go about changing agent behavior in a market that you've operated in? Because it sounds like a real nightmare. It sounds like if I'm trying to sell Homes.com on the phone to an agent, I have to spend 15 minutes just telling them how it works and what the value prop is.
The answer is not successfully.
Right. Okay.
And the one, we have to remember the following, and it comes down to human behavior. Real estate agents are usually have been in the industry for a long time. sometimes it's almost like an apprenticeship. Okay, it's not everywhere in the world you go to a university to become a real estate agent. You often go somewhere, get your license. Some places there's no license at all. And so whatever you learn about how the business operates is probably 90% controlled by the principal, the person who's running the office. So you come in and you're going to learn what they know. So if you're learning what they know, the question is, what do they know? And the answer is they know what was happening over the last 20 years because they probably learned that from the guy before them. Okay, so you have this sort of apprenticeship type model. If that's the case, what's embedded and then what's embedded in the industry is a behavior underpinned by economic structures. So 6% in the US, 1% commission in the UK, 2% in Australia, and so on. Okay. You can't change it's very hard to change the commission structure, which therefore also helps define behavior. So if you then come in and say, well, you know what, the way you used to market is now totally wrong and you're going to do it this way, very hard. You're better off saying the way you market is absolutely right, but I'm going to make it more efficient and effective. And that's why people should tune into our other podcast we had the other day with Mal McCallion about agentic AI, which are tools that are going to help the agents in the existing structure just become more efficient and thus make more profit. And as we all know, people who are running small businesses want to be profitable.
Yeah, we could do a whole, I don't know, we could probably talk for 3 hours about agentic search. As you said, we put out a podcast with Mal earlier this week. I also wrote an opinion piece about it. We won't get into it here because we'll just start, we'll go down a rabbit hole. But suffice to say, it's something that we will be talking about a lot more on the podcast and almost certainly at conferences. The other interesting thing that came out of Andy Florence's comments, and there are always good things to come out of his comments, was he said that this Redfin Zillow deal, so you'll remember it was $100 million deal through which basically Zillow gets access to all of Redfin's rental listings, right? He said, and I quote, it was effectively a sale of the asset that attempts to avoid FTC scrutiny. Can we expect some scrutiny, perhaps? It does, when you kind of, when you think about $100 million deal just for some listings, I mean, obviously, I don't know. I don't have a monetary value for each listing, but like it seems like it might be a kind of a sidestep of an acquisition.
No idea.
Fair enough. Okay,
can't comment on what I have no idea.
Yeah, it's true. Also, famously litigious companies that we don't want to annoy, so we'll move on.
Well, no, I just don't know, and one doesn't know how this is all going to operate in what is the new regime in Washington, which seems to be very business friendly and changing up a lot of things. So I think there's two things at play. One is, is that transaction an acquisition by another name? I don't know, right? I just have no idea because I don't know anything about it because I'm not part of it. Two, how does the US today view that sort of transaction? I don't know. So I think keep an eye on it. Okay. And what it does say is that, like all these markets, and this is probably the bigger point, is it comes down to sort of a 2-horse race. Okay. You do get consolidation. Okay. Look at Germany. You've gone from a whole bunch of players to Scout24 and the Aviv Group as an example. Australia, REA and Domain. And it's been that way forever. In the UK, it was for a long time, Rightmove and Zoopla, now clearly on the market, has got the CoStar horsepower behind it. But most markets tend to end up being a 2-horse race. So let's see how these horses run.
Yeah, okay, we'll move on because, like I said, we don't have tons of background on that one. Harvey, why don't you tell us what's been going on in Southeast Asia with PropertyGuru?
Yeah, of course. So there have been 174 redundancies at PropertyGuru. Why have there been 174 redundancies? So the company went private at the end of last year when it was acquired for about $1 billion. And basically, by going private, there are certain segments of the business that are going to be forcibly shut down. Namely, PropertyGuru is going to shut down its corporate development segment and also its investor relations segment, because they simply don't need them anymore because they're private companies. They don't need to be doing public records, etc., etc. More interestingly, though, Trevor Mather, I'm not sure how to pronounce it, the new chairman of PropertyGuru, has taken the decision to shut down, or at least significantly change, a couple of other big business segments at PropertyGuru. Send Helper is going to be shut down. The data and software solutions is going to be shut down, and PropertyGuru Finance, a mortgage arm that was launched in 2020, also going to be shut down. So it looks to me like PropertyGuru has a new look strategy, and it's basically core markets only: Malaysia, Singapore, Thailand, etc. And we're sort of going to slim down our operation and get rid of all the fluff that wasn't really helping us grow. Simon, I can see you nodding your head, so I'll hand over to you there.
This is something we've spoken about a lot, right? Paring down.
All this the right move strategy. Okay. And because if you I was having this conversation yesterday with someone, and we were talking, and I was out in Los Angeles for the day, and what was interesting is we were sort of comparing the various strategies. Those who were like Rightmove, it's like 75% EBITDA margin, stick to the knitting, don't get distracted by the bright shiny lights, don't chase all the add-ons, etc. Versus companies who do. Okay, I'm going to bolt on a mortgage business, I'm going to bolt on a CRM platform, I'm going to bolt on 30 other things in the hope for growing my revenues that way. Okay, problem is that you add a lot of cost to a business. Unlikely you're going to pick 5 winners. You'll probably pick 1 winner and 3, maybe 2 okay, and 2 just suck life out of what you're doing because it's actually quite hard, and you're competing against specialists. People just do it. Okay. And I think that's what we're seeing here, is that they've gone down the path. They've had a whole bunch of other businesses that in theory made sense. Remember, spreadsheets can tell wonderful stories, but they don't have to do anything, right? You've got to actually make the story happen. And that's where the rubber hits the road. And quite often people don't sort of do what they should be doing in the spreadsheet in terms of volume of sales and so on. Okay, so if I'm EQT, I've come in and I've purchased the business. I've got to make this worth it because I've spent a lot of money buying it. I'm going to get rid of all the things that don't work. It's obvious. Cut. Vroom. Okay. Now the question is, if people see this earlier and don't go down the path of building out, mortgage businesses, etc., how much further ahead would the business have been? Okay. And could have been worth a lot more. Okay.
Yeah,
that's an interesting question, which no one can ever answer because we don't have a time machine that we can go back, jump in, and execute against it.
I think there's an interesting question around PropertyGuru, and I won't claim this as my own. This is something that I read from somebody else who's actually, I think, a competitor of PropertyGuru, basically saying that they are potentially guilty of extrapolating a business model that works in nice, clean, rich Singapore into other neighboring markets that maybe, it doesn't work in.
Absolutely.
It's probably another discussion for another day because...
I 10 seconds on this one because I actually fundamentally agree. I mean, I used to be the chairman of the iProperty Group, which this is a decade ago now, but which eventually got merged in with PropertyGuru. And we knew that had to occur many, many years ago, and we tried to make that happen back in 2012. But failed, and it took a while before it eventually got there. But the one thing that was always clear is you have Singapore, then you have the rest of Southeast Asia. And the rest of Southeast Asia does not look like Singapore. Singapore looks a lot like Western Europe in terms of real estate operations. It's structured, they're licensed, they pay good commissions, the housing prices are much higher, there's money to be shared around and so on. Okay, while everywhere else, it's a far more highly competitive. Real estate agents are very. It's a lot of no regulation in what's happening. portals struggle to make good money out of real estate agents because there's no sole agency. One agent, one property. It's usually multiple agents, one property. Okay, so the structure just leads to a very different outcome. And then each country operates differently. Indonesia is very different from the Philippines. It's very different from Thailand, which is why you see companies like Fazwaz who have emerged by focusing on the transaction.
This would be a perfect point, by the way, to plug what we're going to be doing in how many weeks? 3 weeks?
3 weeks in Singapore. No, not in Singapore, in Bangkok. Where am I going? I'm going to Bangkok. I got to book my flights. 3 weeks in Bangkok. We have the Property Portal Watch Conference. We're going to have around 200 C-level leaders from around the world. Just talking about these sort of issues. What's it going to take to be a successful business? What's it going to take? What models are really working? How is AI going to impact your business? And can you do something different in the market to release value that you couldn't have, that you're not releasing today? So if you're interested in understanding more about the future, getting ideas on how to run your business better, whether you're a prop tech business, whether you're a property portal, it doesn't matter. 2 days in Bangkok, you're going to learn a lot of information from people who are trying a whole bunch of stuff at the moment. Great place to share information, great place to learn. Be there 12th and 13th of October at the Carlton Hotel in Bangkok. Go to www.ppwapac25.com. That's ppwapac25.com.
Yeah, absolutely. We'll see you there. We are deep in financial reporting season at the moment. We have, 4 or 5 other companies, big, important companies that have told the market how they're doing over the last few weeks. Harvey, why don't you very quickly give us bullet points from 5 or 6 of those companies?
Yeah, of course. We just mentioned Fazwaz a couple of minutes ago, so we've been speaking a lot about them recently, and Lifeful has released its Q1 figures for 2025. Revenues have hit the equivalent of $54.4 million, up 2.2% year on year, and Q1 2025 operating profit of $4.2 million. We've got Hemnet, market leader in Sweden.
Before we move on from Lifeful,
yeah, go on.
So we mentioned Fazwaz there, we mentioned Lifeful. What's the connection there? I imagine, and Simon will know this, I imagine that by decoupling Fazwaz and Lifeful Connect from Lifeful's parent company, I imagine the stock price did something dramatic, right?
Went up. So what happened? So the share price was trundling around 150 odd yen. I think 130 yen, 150 yen. I think we chatted about this at some point, that if it drops below a certain point, they're going to face a delisting issue because there's a minimum market cap level you have to have. Then the share price is now, I have not looked recently, but it was around 200 yen. So it had a good bump on that. And I think what was happening at its core is if you look at the shareholders of Lifeful, they are fundamentally either Japanese retail or Japanese family offices or funds that are either in Japan or outside of Japan, but they are Japanese in it. So you didn't have many international owners. By international, I mean non-Japanese people or funds owning it. Now, what they were doing was fundamentally saying, so what's the core business doing? What's the core business doing? Same conversation as PropertyGuru, when you think about it. And the problem was the core business was probably doing okay, but the international business was seen as a distraction. Lifeful Connect. Wait, you got vertical search, and how does that work with transactions? And you're in Thailand. Wait, you got this business in Mexico? Can you help me understand how this? And then if you're the CEO, you're sort of, and his name's Takashi, and he's a very good guy. He's very visionary, but it's a very hard sell to your core market when they're going, yeah, but what's happening in Japan? And why you got this business in Mexico that's also in Southeast Asia, that's got an office in Barcelona? Okay, it's a complex question and a very complex sell job. And so they made the logical decision to fundamentally say, you know what, we're going to go from being a majority share or the shareholder and thus having 100% of the revenues and losses on our books So it goes through the same P&L to now be a minority shareholder at 45%. Okay. And thus, we just have to do equity accounting. Thanks very much. Which means I don't have to have it in the P&L. Now my P&L looks a lot better. The market goes fantastic. You're focusing on the core business. We like that. We will reward you with a higher share price. And the share price goes back up again.
Perfect. Good explanation. Sorry, Harvey, I cut you off. You were about to tell me about, was it Hemnet?
Yeah, I was going to say something on Hemnet, but just to quickly say that Lifeful is notoriously one of the most difficult companies to report on because it's such a complex business, as Simon just explained. We've done a bit of a write-up on online marketplaces. So if you do want to find out more about revised forecasts for full year revenues, etc., just check them out on online marketplaces. Let's go over to Sweden. So Sweden, Hemnet is one of the most dominant portals in the world. It never ceases to surprise, and how much growth they can achieve quarter on quarter and year on year. They've got 57 million in the bank after this year. Net sales increased by 38% to 126 million from 2023 in their full year results. ARPL, average revenue per listing, increased 42% year on year at Hemnet for their full year results recently.
Sorry, 126 million what?
Dollars.
Dollars.
Apologies. So it's $1.5 billion Swedish krona and $126 million. They're finding new ways to squeeze money out of listings, and they're just continually growing. And they do have a new CEO coming in very shortly. That's going to be an interesting journey to see where they find their next growth lever. But as always, Hemnet, one of the better performing portals, pretty much quarter on quarter every year. Next up, Frontier Digital Ventures. This is a Malaysia-based company with a LATAM interest. They've got Finca Rais, Info, Casas. They have multiple businesses with different levels of stakeholders. They've got 100% ownership in Encuentra 24 in Central America, in Finca Rais in Colombia, and they also have smaller holdings in things like Zamin in Pakistan. Ed, do you want to maybe take the lead on the Latin American segment? Because this is a bit of a complex one and you know more than I do.
Yeah, so I reported on this a couple of weeks ago and was pretty shocked to see that the Latin American arm of Frontier Digital Ventures had a bit of a revenue collapse. Now, we actually, Simon and I decided to investigate this a little bit. We actually know the CEO of 360 LATAM, the kind of Latin American branch of Frontier Digital Ventures. And our interview with Ricardo Freichu will be coming out early next week, where he explains this big dip in revenue, and it will make sense. So we won't go into it here, basically.
But at its core, it's a change in business model. And I think from how he describes it, I think is a very smart change. And so I think it's I'll give you two choices, Ed. You can have $100 revenue, $90 of cost, and $10 of profit, or you can have $50 of revenue, $30 of costs, and $20 of profit. Okay. And by the way, your profit's going to grow at 50% per annum. Which one would you want?
I want the profitable one, please.
Yeah. Small but profitable.
The only thing we'll say about that is if you are an FDV shareholder and you just saw, oh, wow, look at this revenue collapse, just watch the interview on Tuesday or whenever we put it out, okay? And it will all make sense.
Yeah, but I do think we need to make one comment, and that is that the FDV share price is basically at an all-time low, okay? And it's been listed for nearly a decade, okay? And it's now down to 21 cents, or a market cap of 93 million Australian dollars, or convert that to US dollars is probably around $50 million.
Yeah.
Okay. Which, and the question is why? Well, if you look historically, if you go back to sort of end of 2021, it was $1.80. It's now down 21 cents. So it's fundamentally lost 85% of its value in that time. And what's really been driving the move in the wrong direction has been a couple of things. One is a lot of it was value was tied up in Zameen in Pakistan, and that of course has, through a whole lot of geopolitical issues, has fundamentally become almost worthless in the business, to be honest, because you know the business has ground to a halt. There's a lot of you can't get money out of Pakistan now, and so on. It's just fundamentally different structure for that business and that market. And then the second thing is, you know, all eggs were then put into the LATAM 360 bucket, or 360 LATAM bucket, which of course, with the change of model and the drop of the revenues from that segment, has spooked the market. And now you're sitting at a all-time low close. And I think the real issue is and then you put all these other assets that they've got, right? They've got a whole bunch of other businesses in Southeast Asia and wherever else in the world it is. And they are probably an anchor on what is fundamentally a good business in LATAM 360 LATAM. And I think, yes, I wouldn't be surprised, and I have no knowledge of this, to see someone buying this, you know, taking the business off the market, buying it, selling everything else, and just focusing on putting Zameen in the bottom drawer, getting rid of all the other assets, even closing them down, and focusing on the Latin American business, because there is a very good asset there that's lost within this overarching conglomerate. Okay. And it's very hard to be a conglomerate when your total market cap's $50 million.
Cool. Okay, we will leave the financial reporting there. I have one more quick question for you, Simon. So we have seen some CEO changes over the last few months. So Harvey mentioned there, Hemnet, they've had a change in CEO. REA Group in Australia, changing CEO, Owen Wilson stepping down. And obviously we mentioned Domain there. And I want a one-word answer on this, please. Let's say you are in charge of looking for...
And Zoopla, I believe.
No.
No?
No.
No. Was it?
No.
No? Okay. Wrong one.
It was a rumor. It was a rumor that they shut down pretty quickly.
Yeah.
Oh, okay.
There is somewhere else as well, but I can't remember it off the top of my head. But the point is this. A few years ago, I did a bunch of research into, you know, who tends to end up, the profile of CEOs at these companies. And it was quite instructive. I found that like almost none of them have agents come in and take on CEO roles. I want your quick answer on this. If you were looking for a new CEO of REA or Domain or Hemnet or whatever, are you looking internal or external? Are you looking at someone who knows the business or someone who's like, you know, some management star elsewhere?
Depends. Sorry. And let me explain why.
And we'll leave it there, ladies and gentlemen.
No. And I've got a very quick answer for this, right? If you're driving something like Rightmove or REA, right, a lot of it's about a steady hand, understands the core drivers of the business, and understands a lot of this is just price increase. Okay, really, when you take all the noise out, it's price increase. Okay, so you need someone who is going to, you're at the front of the race. You want a steady hand who knows how to drive the car. You want the Max Verstappens of the world, right? They're at the front. They're gonna win the race. Okay, and not crash the car. But if you've got someone who is further back in the pack, Domain, On the Market, Zoopla, anyone who's in that challenger place, okay, then you need to be someone who's going to do something different, because if you keep doing the same thing that you did yesterday, today you're going to have the same outcome. And you want to change the outcome. So you've got to be innovative, be a little bit risky, understand the market, be aggressive in what you're doing. If I'm running Domain, I'll be lasering focus into, for example, eastern suburbs of Melbourne, eastern suburbs of Sydney. I don't care what's happening in Queensland, because I'm never going to win that game. Okay, I'm going to get my variable pricing right. I'm going to run a different race from what has been traditionally done. So the answer is it's horses for courses. If I'm a market leader, I want a steady hand who doesn't have to be massively aggressive, but needs to know what they're doing, very clear in writing instructions, and then get out of their way. If I'm in an attacker mode and I want to change the outcome, I want to have someone who's going to be innovative, who's willing to take a few risks, who's going to do it slightly differently than what's happened in the past, because I need a different outcome from this, from where they are today.
Okay, very good. One-word answer there. Yeah, makes sense. Cool. All right, that is all the news that we have time to discuss today. Harvey, Simon, thank you very much for joining me and sharing your thoughts. And well, as Simon said about 15 minutes ago, if you haven't got your ticket to come and join us in Bangkok, get on that now while prices are still relatively cheap. We'll see some of you there, and we'll see some of you in the next episode. Thanks for listening.
Bye-bye.
Thanks, everyone.